please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Nifty -10, -8. Okay, not a whole lot bad, but it's Nifty Bank which is bleeding.
If we stay within a 1,000-point range and spend some time, it's quite okay because quality will reassert itself.
We have given a guidance of between 10 and 12% for order inflow growth and between 12 and 15% for sales growth.
Adani Wilmar has really upped its bid and has given a tougher competition to Patanjali.
Bank of India, Dinabandhu Mahapatra would be asked to head Allahabad Bank.
We have shared each and every information properly and on time, and everything is recorded and documented. So from the last 8 years, there are no problems, no issues.
It's the Bank Nifty which sort of was the big underperformer today. A lot of stocks were down. ICICI Bank was down. Even the big ones like HDFC Bank and HDFC, they were down. Look at ICICI Bank move. 3% lower is what we had.
Rome roils the world. Political crisis in Italy triggers a global sell-off, drags Dalal Street indices to Nifty and the Sensex close 0.5% in the red. Midcaps fare just a tad better.
The Nifty Bank is the worst casualty, falling 1.4% as banks sell off and fall the most in global markets. NBFCs too take a beating as bond yields soar. Bank of India, Bank of Baroda, ICICI, M&M Financial lead the losers list.
Rupee snaps its 3-day gaining streak, slips almost 1% on the back of a strengthening dollar, is one of the worst performing emerging market currencies. But the weak rupee helps tech stocks outperform.
Oil and gas stocks are the flavor of the day. Oil marketing companies continue their uptrend on easing crude oil prices. Gas stocks remain upbeat after IGL, that is Indraprastha Gas Limited, hikes CNG prices in Delhi and the NCR region.
Finally, BHEL, L&T and Mahindra all clocked big gains in trade today in response to good fourth quarter earnings. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all the nitty-gritties about 8 hours of trading packed into just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Hi Lata. So we've got some global turbulence once again, which is showing up here on our shows. Well, as Lata pointed out, over the next 30 minutes, we will essentially wrap out the day's trading action as shown up on 5 of the top stories which define the day. We will, of course, have a Q&A session. You send in your queries, they get answered. Today, we have IIFL Sanjeev Bhasin and technical expert Mitesh Thakkar, who are with us to talk about the questions and answer them. Well, before we start the Q&A session, let's take a very quick look at what happened as far as the day's trading session is concerned. I mean, I guess the first half was local because overnight you didn't have very much by way of cues. Global markets were shut. But second half, I think it was back to watching the global screen. Lata.
Actually, we started on a sedate note, as you pointed out, and Asian markets actually towards late trade started giving up gains, either because, everybody had run up a bit with the global holiday, with the US holiday for Memorial Day on Monday. But as European trade opened up, you could see the impact of what was happening in Italy, the possibility of snap polls, possibility that the winner may go to the extent of demanding Italy's withdrawal from the European Union. I mean, these are, of course, far-fetched fears, but it was clear that the market had not even built in these pressures ahead of the Italian polls. And so you saw European indices fall, the Italian index fell the most, Euro fell, and that led to dollar index touching almost 95, which obviously spells first risk-off on emerging market equities and emerging market currencies. India was not spared either. You saw the Sensex and the Nifty lose about 0.5%. But all over the world, because of this currency-related source of the fear, it was the banks that sold off the most. And that was the case in India as well. But you have some more color in terms of stocks.
Lata, so PSU banks continue to see some profit taking, and it's not just limited to PSU banks, it is the private sector banks as well, which lost a fair bit. The Bank Nifty, of course, showed up as one of the top losers. I mean, apart from that, you had losses coming in the pharmaceutical space, you had losses coming in the real estate space, and I mean, a sector like media, which actually saw some profit taking today as well. In terms of stocks, let's just begin with the losers, large cap losers. Aurobindo Pharma, earnings impact. Bank of Baroda, 3.5 lower. ICICI Bank was down 3%. State Bank of India, I mean, actually, the long list of PSU. Bank of India was another large loser with large volumes. Z Entertainment and Yes Bank and IndusInd Bank were the private sector bank losers today. Lots of banks. Well, what was higher? Bosch was higher. Mahindra and Mahindra was higher, partly earnings related, and Gas Authority of India was up about 2% today as well. In terms of the mid-cap, small-cap, larger list, Uflex, Nitco, Radico, BHEL, Hindustan Copper, Info Edge. I mean, even today, mid-caps actually fell less than large caps. So there is that sense of outperformance which came through. You look at the broader market losers, and there were quite a few. Jubilant Food lost. PC Jewelers was down meaningfully. Bank of India, Mahindra and Mahindra Finance, Raymond, Godfrey Phillips were some of the other big losers. Lata.
Okay, well, I think we need to understand the Italian problem, and none better than someone from the European zone itself. We have Nick Parsons, founder and managing director of Simply Macro Strategies Research, joining us. Well, Nick, thank you very much indeed for joining us. Just parse this problem for us. Is this just an Italian problem, or will it spill over?
Well, it is, as always, my pleasure to be on your show from London. I think it is mostly an Italian problem, but it risks becoming a problem for the euro as a whole. And in that regard, we are here at 115 on the euro dollar, where we haven't been since June of last year. But when we had the real sort of existential crisis, would the euro continue if the French vote, you remember, in April and May last year, if the French voted against the euro in the presidential elections, we were down then at 105 and 106. So the risk for the euro from here is that it revives those memories, and also it revives that price action. So although it's only an Italian crisis at the moment, it could have further to run for the single European currency.
Okay. Would it ultimately prove to be a chance to buy, actually? That's what the French crisis was. I mean, of course, that turned out to be a turning point. That was what Brexit was. That was what even ultimately Grexit was. The European Union stood firm. Can we go with that confidence?
I think we can go with that confidence, but of course what matters is levels. Every sell-off historically is generally a chance to buy, but buying too soon is simply the wrong strategy. And in this type of environment, there are no prizes for being first. They often say the pioneer is the one who gets scalped. And I think we're going to see investors just holding off a little bit further from here, even though the scale of the sell-off in Italian assets has been quite dramatic. I think people are going to be a little bit wary of jumping in too soon. They want to see a policy reaction. They want to see a political reaction. They want to at least see some reason to be buying in from here and to have some hope. And at the moment, those things look strangely absent.
Well, Nick Parsons, we'll leave it at that, not the least because things are still on the boil in Rome. And we will come back and ask for your advice when things perhaps crystallize a bit. Let's see if the polls are ordered and when they are ordered. Thank you very much indeed for joining us.
You know, Financial Times ran a story, Lata, I think it was last Friday, Italy, too big to fail, too big to save.
All right.
I mean, I think that nicely captured the sentiment out there.
Maybe we'll go to Mitesh.
Mitesh, so, sorry. So just a quick word on the market, the way it fell, and how would you see the trajectory from here?
Yeah. Good evening, Prashant. I think clearly Lata was highlighting the problems was more with the banking side, and the bank Nifty was the one which actually put a lot of pressure on the Nifty. The bank Nifty, if it remains below 26,300 and possibly continues to decline, then I think that will possibly bring the Nifty down, and the Nifty could break the immediate pivot support of 10,610, 620. That could suggest that the up move of 3-4 days is kind of come to an end. We might get into a choppy range. So broadly, I would be watching the bank Nifty with a very close focus. If it starts getting past 26,300, all should be well, and the Nifty is also above support zone. So then we'll continue trading with more of long bias. But in case we see the bank Nifty drag down further tomorrow, then I think we're in trouble, and we will possibly look at some shorting ideas.
Okay. Well, that's our second headline, actually. The second headline of the day, Bank Nifty and NBFCs took a beating in trade today as bond yields soared in trade. The Nifty Bank Index was down over 1%. As banks sold off actually in most global markets, the fall was led by Bank of Baroda, Bank of India, ICICI Bank, all of which were down between 3 and 5%. NBFCs also took a beating as bond yields soared, and there the fall was led by M&M Financial, Canfin Homes, both of which tanked over 3%. Okay, well, I just wanted to add that in a way we could see the root of the crisis. It started off as an Italian problem. Will the euro weaken? An existential crisis for the euro, as Nick Parsons just said. And that led to the dollar getting strengthened. The dollar index going almost to 95. I can't remember when we last went that strong. A strong dollar inevitably means weak EM currencies. And the rupee, since so many people had gone long on it yesterday, turned out to be the best shorting candidate. So the rupee fell more than other emerging market currencies. When rupee falls, the feeling is, oh, all imports get expensive. And therefore, there's an immediate impact on inflation fears and bond yields rise. The rise in bond yields had a negative impact on NBFCs, who are usually borrowers in the wholesale market.
All right, we got a question coming in. Arundhati Lokare has a question, and this is an open-ended question about the fact that she wants to put some money to work. She wants to know if she should look at buying 50 shares of Bajaj Finance or HDFC Bank for a period of 1 to 2 years. Sanjeev, what would you tell her? HDFC Bank or Bajaj Finance?
Well, both of them are pedigree stocks. They've been multi-baggers and extreme wealth creators, and I think both of them deserve to be bought. So spread your risk, buy both of them. They've been outperformers, and I think they continue to be. There is no second opinion on both of them. All
right. Okay, with that, let's get to the third headline of the day. The rupee snapped its 3-day gaining streak. The Indian currency slipped almost 1% on the back of increased demand for the greenback. This means the rupee has become among the worst performing currencies in the emerging market basket. Weak rupee helped tech stocks outperform. Nifty IT ended the day with gains of over 0.5%, led by stocks like TCS, Infosys, Tech Mahindra. In fact, let's listen to Atul Suri of Marathon Trends. He spoke to us about what he saw as chart trends on the IT sector.
Look at the mid-caps, and more importantly, go and see the kind of volumes that are happening. There is some massive accumulation happening, and this kind of accumulation is not a retail kind of accumulation. This is kind of a large institutional money that is flowing into them.
Okay, question. Twitter user Vijay Raghavan has 50 shares of Mindtree. He's paid 561 rupees each for them. He would like some advice on what should he do, hold or sell. So the question is Mindtree. Sanjeev, again, coming to you.
No, definitely a hold. One of the best performing mid caps, and I think the promoters have been very able in transforming the company. As a disclosure, we've had a buy on this. It's been a doubler. We still think there is at least a 50% upside, and I think it's one of the best stocks to own in the mid cap space. So we put in it. Maybe Mitesh can give you a stop loss if you are looking for a short term. If you want to book profits in the short term.
Okay, why don't you do that, Mitesh? Mindtree, is it a buy in the first place, and what are the levels?
I think no point selling this off. I think, one, we had a buy on this couple of months back, and I think the stock is still showing signs of an extreme uptrend on the monthly and the quarterly charts, which means that while you might have 1 month of a 2 month kind of a pullback movement happening, but I think this is showing signs that it will continue to make higher highs and higher lows on these longer term charts for next many months to come by. So I think I would put a target of around 1400 over here. Maybe buy more in case the stock comes down to 900. If he wants a stop loss, it will be deeper at about 770 or 750 odd zones. But I think clearly any 10% correction should invite more buying over here.
Okay, that's good to hear. Mr. Vijay Raghavan has got his answer. We will take a break on that note, but as we do that, let's leave you with some more chartist opinion that we got from Atul Suri of Marathon Trends. Stay right there. We are back in a jiffy.
I think we are still in a very longer term bull market in metals, and again we've had a hit back on some of these But I do think that, as I said, that no bull market has every good day or every good week or month. So I think we are having a bit of a pause. Three things stand out, and you can just see it in index. You look at the FMCG index; it is higher than where it was in Jan, and the market is still 4% from there. You look at the IT index, and thirdly, you look at private banks. They're just in the verge of breaking out.
With us here on Markets Today Talk Back, we are wrapping up the day's events. Sanjeev Bhasin and Mitesh Thakkar are taking your questions, answering those questions. We got through 3 of the top 5 stories that we put out on this show. So here's the fourth one. Oil and gas stocks were the flavor of the day. Oil marketing companies continued their uptrend on easing global crude oil prices. HPCL, BPCL and IOC all gained close to 1% each. And so did gas stocks. They were upbeat after IGL increased CNG prices in the Delhi and NCR region. IGL gained over 3%, followed by Mahanagar Gas and GAIL, which were up about 1% each. Sonal Bhutra is here with some more details on what happened. Sonal, over to you.
Yes, Indraprastha Gas Limited and all other city gas distribution companies were in focus today because IGL had increased the prices of CNG across its stations in the areas of Delhi, Ghaziabad and the NCR region. This price is effective midnight of 29th May, that is today. 1.36 per kg is the consumer price that has been increased for CNG in Delhi, and for the areas of Noida, Greater Noida and Ghaziabad, the price has been increased by 1.55 rupees per kg, and this has mainly been done to offset the increase in the raw material prices. The company says that this is done to offset the impact on its input costs as a result of recent appreciation in dollar versus rupee, and this is something that the company has done in the past also. Now remember, this is the second price hike in last 2 months. Company had already taken a price hike effective 1st April. So this particular price hike, where it is trying to offset its input cost, is will not change the margins or the operational performance of the company so much, but definitely it's a sentimental positive, and that's why we could see some ripple effect on the other gas stocks as well today. Back to you.
Oh yes, that we did see, Sonal. Thank you very much. So some questions on these gas stocks. Indrajit has tweeted to us that he would like to know which is a better stock to buy, IGL or...
That may have been unwarranted. After this price hike, it will negate the price of the weakness in the currency exchange, and I think it should be a very, very smooth ride for all these 3 players. So if I had to go, I would definitely add all 3 in reasonable quantity. It will give me a flavor and it will spread my risk.
Fair enough. The 5th and the last headline of the day then. Take a look at the day's earnings and the stock reactions. First up, Bharat Heavy Electricals, BHEL reported their 4th quarter numbers. The stock gained over 5% due to an improvement in the company's margins, although the net profits and revenues were amiss. Mahindra & Mahindra also gained over 2% in response to good earnings. The company's net profit and EBITDA beat expectations, while the margins were way over what was expected. L&T gained close to 0.5% after posting a healthy set of quarter 4 numbers. Net profit and margins came in higher than what the street was anticipating. In fact, let's quickly first listen in to S.N. Subramaniam, Managing Director and CEO, on their FY19 guidance.
It's been a decent year for us, 17-18, and we look to 18-19 with a fair amount of optimism. So we have given a guidance of between 10 and 12% for order inflow growth and between 12 and 15% for sales growth. And we're fairly confident that this is possible as we look into the year.
Okay, with that, let's come to some questions that we have got from people tweeting to us. And inevitably, this is on BHEL, up 5.3% today after the numbers. Well, this is Harsh Punjabi who has tweeted to us, and he says yes, 200 shares of BHEL purchased at 113 rupees, and he wants to know whether the upside for the stock, and also mentions that he can hold it for the next 3 to 4 months. Okay, it's got a smart uptrend from 75 rupees onwards, but not yet reached, I think, Mr. Punjabi's levels. Sanjeev, what would you advise him? 3 to 4 months?
Lata, 3 to 4 months would be difficult, but let me tell him that if he has a longer term view, we think some of the power manufacturers, power equipment players, even the power financiers seem to be in very good shape, given that the results were much better than expected, and we think most of the distress on power assets may be done with. If you have a 1.5 year view, then I think aside from part of renewable energy coming back, there has been no expansion, and some of the assets could turn out to be very, very good, given that the power supply position is actually seeing a huge uptake on the demand side. So if he can sit through for another year or so, he would actually get back his money. Otherwise, in the short run, I would say switch to a L&T, where again we think their numbers both on the hydrocarbon and on the power equipment side have been very, very pleasing. So if he can shift there, he might make up his loss, but 3-4 months for 115 rupees would be slightly stressed.
But in any case, what will he make in 3 to 4 months, Mitesh?
Well, difficult to say when, but I think, I would also advise possibly expanding the time horizon for holding the stock. I think the stock is extremely oversold on the longer term charts. Now, typically what could happen is that it would do some base building before it reverses the medium term trend. And I do believe that BHL is on the verge of doing that. And I think in the next 5 to 6 months, it should be above his buying price. I think I'm looking at a target of around 115 to begin with, and maybe even bigger targets once, we have some kind of a stronger reversal on the medium to longer term chart. So 6 months to 7 months, I think he should be definitely be into the profit. So hold on, maybe he can add more with a stop below 75.
Okay, we got one more question. Krishna Chaitanya has 200 shares of Mahindra & Mahindra, bought it 735 rupees a share. So Krishna is sitting on profits, plans to hold it for a year. Basically wants to know whether it should be held for a year or no. Sanjeev, what would you tell Krishna?
Well, standout numbers, and particularly on the tractor division and the all the sale on the irrigation tractor side. So it's a no-brainer. It's one of the best plays. It has transformed itself well, and I think there will be a lot of traction on the SUV side also, where they have relaunched some of the new brands. So I think on any decline, he should add this stock. This stock's fair value, according to me, is close to 1,050 by the end of the year.
Okay, unfortunately out of time on that note. Sanjeev and Mitesh, thank you very much for joining us and answering